Hey, this is Tom, and if you're watching my channel, I assume you have Tesla shares in your portfolio. I've been a Tesla investor for a long time, and I'm assuming if you watch my channel, you either invest in Palantir or Tesla or probably both. Now, the question in your mind is the same question on my mind. What are we doing with this stock at $650? Now, April 4th, the share price was $1,100 per share. We're currently at 650. $650 per share. That's a huge drop. So the question is, what do we do now? Because there's really three options here. You sell everything and you cut your losses and you basically say, well, there's much more shit ahead. I don't want to deal with it. I'm out. Option number two, you lower your head and you wait for this thing to blow over and you don't do nothing. You keep your shares, you stay steady, and just ride it out. Option number three, you're buying into the weakness. You're doubling down. So there's only three options. Now, obviously, I do not have a crystal ball. I am not the oracle. And as you all know, I've gotten things wrong before, multiple times. But what I want to do here is create a system for myself and share this with you as far as how I'm attacking the situation. And even if I'm going to be wrong about it, I'm going to be disciplined and I'm going to be following statistics, numbers, and fundamentals into my decision, not a hunch, not a gut feeling. So this is how I look at it. So Tesla has one major negative catalyst coming up right now for sure, which is weak Q2 deliveries. China was locked down for a big chunk of Q2 so far, and it's going to have a negative impact on the deliveries. And nobody will care about why this happened, and the algorithmic trading is not going to be all sitting there saying, hey, it's the China lockdown, it's okay. So there's going to be a lot of downward selling pressure because of the Q2 numbers. I mean, it's just one excuse that the Tesla haters need, and algo trading doesn't need excuses. However, despite this negative catalyst, which is absolutely upcoming, the question is, what do we have in the cartridge for positive catalyst? Because you have to understand, the way the stock market works, it's very different. Equities are different than commodities, for example. When you're trading commodities or energy, you're trading at the price now, right now, today. When you're trading in equities, a lot of future developments are getting priced in advance today. So in equities, you're really trading in the next 6 months. So despite what I just said, having said that about China lockdowns and impacting negatively, the deliveries, there's other negative catalysts, obviously. Jefferies just downgraded Tesla from 1,200 to 1,000 because of essentially negative noise and bad PR and interest rate hikes, obviously. So there is that, of course. So there's negative noise around Tesla because of the Elon Musk escapades, and there's China lockdowns leading to less deliveries. And definitely it will negatively impact the share price. There's no doubt in my mind. However, what I want to realize here, thinking with you together, is are there any positive catalysts that will work in the opposite direction, and how strong are they compared to the bad catalysts? So let's think about it together, right? First of all, obviously, China just announced through officials that they're reopening in June. Because essentially what they're doing, and it's funny to me to have this conversation with you because I think it was quite obvious to everybody with half a brain, is that China is about to face the situation where they say, well, the operation was very successful, but the patient just died. So their zero tolerance policy is working. However, they're killing their economy, they're killing their people, and basically everybody is going out of their mind. So it doesn't make no sense to kill your economy and abuse your citizens for a zero tolerance policy. So Chinese officials came out. I just saw an article on The Guardian, but there's many other articles talking about how June is going to be the last month of the zero tolerance policy. So I don't know when in June, but in June, they're going to lift the blockade and everybody will go back to normal. I mean, they can't do this for long. China is really focused about their economy. I don't think it's going to be lasting anywhere from, probably 2 more weeks. So that's a positive catalyst because that means that Tesla Shanghai factory is going to go full operational and some. Now, the second catalyst that you can think of, and again, it's kind of, again, a no-brainer here because the Twitter deal is impacting negatively Tesla. Everybody thinks that the Twitter deal negotiations are a distraction. So once the Twitter deal closes, either way, either it falls apart or it closes and they actually merge, or wait, he buys it, sorry, it's not Tesla merging. But either way, a certainty about Tesla, or sorry, Twitter and Elon, it makes this go away. So the deal has an expiration date, which is October this year. So at the latest, October is when the deal either gets done or it gets canceled. Now, right now it seems like the deal will get done at a lower price, probably around 42, 43, 44, $45, give or take. So that seems to be the option of the day. But, Elon is kind of Elon, so who knows? But October, basically, this goes away. So Q4, there's going to be zero Twitter news, Twitter distractions. It's going to be gone. So that's not going to be impacting negatively the share price of Tesla. We know that for a fact. Now, the other thing we know is that we have a stock split coming up. And as you know, stock splits, even though fundamentally they don't do anything for the company valuation, they allow for more liquidity. There's obviously more psychological issues here, ease of trading. Obviously, people who trade options have an easier time to trade with a lower share price, because there's a minimum amount of options you have to trade. So when you have a $600 share versus a $60 share or $50 or $30 share, it makes it more accessible to options trading and a lot of retail investors. So there's going to be kind of new blood in the system. I don't know if it's good or bad for the stock, but all I'm saying that the split most likely will be a positive catalyst for the share price. Obviously, it does nothing for the company. I don't really care about that. But what I am excited about is the fact that FSD, which is a revolutionary concept, is going to be operational, I believe, by the end of this year. So Q4 is probably where we're going to see full self-driving actually get released into the service, because there is no car company in the world that has a sustainable service as a software income. OnStar, yes. I mean, there's people who tried to do it before, but nobody has FSD. FSD is a $200 a pop per month software that is 90%, 80% margin that Tesla is going to release, I believe, in Q4 this year. And the creation of this extra revenue stream with such high margins is going to be insanely beneficial for the fundamentals of the company, not just the PR, but obviously also the PR. That's going to drive the price up. Obviously, there's also things coming up next year, which I'm not going to talk about, which is the Cybertruck or all the events and potentially new factories. I'm not going to talk about that. Just based off, FSD by the end of Q4, Twitter deal finishing by the end of October, the stock split, and of course, don't forget China going back online. It seems to me that even though there might be more pain ahead for Tesla share price in the next 2-3 weeks, maybe month, maybe 2 months, by the end of the year, it seems that they're much more overwhelmingly, much more positive catalyst than negative catalyst ahead. So short term, probably more pain ahead for Tesla as the Elon saga continues with Twitter, and as Shanghai is still locked down, and as Q2 numbers will come out. But after that, I only see positive catalysts. That's God's honest truth. So I'm personally going to be doubling down into Tesla shares. And this is not an advice for you to do it, because obviously I'm not a financial advisor. This is not financial advice. You know this. You have to do your own research. Because, I've been wrong before, I might be wrong again. This might be, the ramblings of a madman, blah, 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 all that stuff, right? But I personally will be doubling down, because I believe that Tesla, by the end of this year, is going to be back to 1,000 region, which is I believe, going to be one of the most lucrative plays for me. My target price for Tesla since 400 was $1,500. So when Tesla was 400, I said 1,500. So it stays $1,500. I value stocks based on the current valuation. So currently, I believe Tesla is a $1,500 stock based on pure securities analysis valuation. But I don't think it's going to reach that this year because of everything I just mentioned. But I do believe by the end of the year, it's going to be near 1,000, which is exactly the reason I'm not staying in. I'm doubling in. So I'll be buying a lot of Tesla over the course of the next few months. And you can do your own research, decide for yourself. But I just wanted to share with you kind of my analysis of where things are headed as far as Tesla. Because if you zoom out a little bit, you actually see that the positive catalysts are overwhelmingly stronger than the negative ones if you go like all the way to Q4, end of Q4. Hope this was helpful. See you in the next video.